Good afternoon, guys. It's Nick at Optima PS. I hope you are well. I'm back once again with a video. I apologise, it's been a while since I've been on, but as I've said to you guys before, I only really show my face when I think I can bring some value to the table. And this last week, or let's say the last 2 days, has brought forward something that I figured I might be able to share some knowledge with you on. It's been an interesting couple of days, hasn't it? So we are Sunday the 12th of October. We are roughly 48 hours after the aftermath of what's now being called the October liquidation event. Lots to unpack on that. I'm not going to go into too much detail on it. I'm going to dumb it down as much as I can and share my thoughts on basically what happened. For those of you who may have been living under a rock, essentially what's happened is we've had a huge flash crash in the whole crypto market, really. Some sectors affected more than others. And the most important part of this is leverage traders really took the brunt of it. I'm not one of them guys who jumps up and says, I told you so. I'm absolutely gutted for everyone out there who's lost. But I have been screaming all over my Twitter account for weeks, if not months, about leverage trading in this market, the risks involved. It's not the same market it used to be. It's not the same market it used to be. But before we get into that, as you know, my name's Nick. I am a financial advisor. But as ever, I'm absolutely not your financial advisor. I don't know the first thing about you, so I couldn't possibly give you anything but terrible financial advice. So please don't take anything I say or do today as anything but the ramblings of a guy on the internet who just has a shared interest in the crypto world with you guys. And so let's take a look where we are at the minute. So just jumping on to CoinMarketCap. Markets do seem to be stabilizing a little bit now. They've kind of found their place. We've got Bitcoin sitting at 111,536. We've got Ethereum at 3827. We've got Binance at 1179. We've got XRP at $2.39. Solana 182. It's the 7-day trend that's more important, I guess. You can't see my mouse here, but on the 7-day, we're looking at Bitcoin's 10 down. Ethereum's 16.5 down. Then you've got XRP 21, Solana 22, Tron's 8% down, Dogecoin 28. The whole market together collectively took a huge hit. And this happens in crypto. You know, let's go the other way. Let's just think back. Probably the last time I posted a video, because I only really jump on when the markets are in turmoil, prices were probably not too dissimilar. We're going back to July when things had come tumbling down from the April highs, and we were looking at prices, and they probably haven't changed a great deal. And, you know, we're October now, 4 months at the end of the day, 3 or 4 months away. In the grand scheme of things, this isn't the biggest disaster in the world. For many people, though, it's a very hard-learned lesson, and as I say, my heart does go out to people out there that have been wrecked with this. Leverage trading is very rarely your friend. And I know there's people that make a fortune with leverage trading, but that's why the institutions do it. They will literally lend you money to place trades, to make a win or a loss. And, you know, you could look at it in good times and go, why the hell would they do it? They're literally lending me money to make a return and paying me on the whole amount. Why would they do that? Well, this is why. Because we call it the long number. Once every now and again you get caught out, and when you get caught out you give it all back and then some on top. There's people out there that are being liquidated for unfathomable amounts of money. I've seen tweets. I'm sure you've seen all the tweets. There's a guy out there who, I think he was tweeting on behalf of his friend actually, but basically saying a friend of his had sort of got a $30 million portfolio that disappeared in 5 minutes. I have a friend who lost a chunk of change. Nothing like that much, but a chunk of change, a significant amount of money in 5 minutes. And he was only on 2x leverage, you know. And again, I come back to what I always say. People say, oh, I thought 2x leverage was safe. Well, safer than 10x. But at the very end of the day, if leveraging was risk-free, everyone would do it. If there was only the guarantee that you were going to win, why would they lend you money to do it in the first place? You know, it's the long number. Eventually that number comes around, that day happens where it wipes you all out. 2x leverage, if the market dips by more than 50%, you will lose every last penny, and that's exactly what happened to people. It's such a difficult one to talk about because there's no nice way of saying you've learned a terrible hard lesson there. But the honest answer is we're in a sector here where you can make 350, 400, 1,000% growth in a year. Why do we need leverage on top of that? I don't understand it myself. But I know for certain that leverage trading eventually bites you in the ass, and that's what's happened here, unfortunately. And I'm really sorry that it's happened to people. I hope that people manage to pick themselves up and come back from it. There were 2 or 3 things that happened. I mean, obviously, there's a big sort of voice out there in the world that's pointing fingers at the exchanges, saying, "Oh, they deliberately crashed the markets." Yeah. I'm not a guy that goes around accusing people very often, but I could buy into that theory. I'd say buy into that theory. I was telling people before it happened, not blowing my own trumpet, but I said there was too much placed in long trades. Why would the exchanges allow people to hold 10 billion, 15 billion, 20 billion, it sounds like, in leverage trades at what? Anything between 2 to 10x. Some exchanges will even offer 50x, I believe. Why would they do that and allow you to take billions, probably even trillions across the market of dollars from their pocket and put it into your own, or from the exchange's pocket? It doesn't work that way. They'll allow you to do it for so long, like the drug dealer that will give you a little piece for free, and then a little piece for free, and then suddenly you're hooked, and then he starts ramping the prices up and expects you to do some work for him. It's ridiculous to think, once you take a step back from this crazy roundabout that we've got in the crypto world, why would anyone give you their money to make profits and pay you the profit on all of it? They have to have something to gain in the end. They did the same thing in 2017. They did a similar thing in 21. It wasn't quite as big. They deleverage the stocks. That's what they do. The traditional markets have been doing it for a long time. A very, very good friend of mine is a traditional market trader. He's not a day trader. He worked a long time for the big banks. He worked at Goldman. He worked at some of the big banks out there as a trader. He now runs a trading school because he likes doing that side of things. He still makes multi-million dollars a year trading, but he's always professed this. He's like, look, day traders don't understand that you're not trading against the market. You're trading against your own trading platform. There's been some rules that have come in with the traditional markets in recent years that kind of prevent it. They don't necessarily make it illegal, but the platforms have to disclose when they're taking trades against their traders, which reduces it down, but it doesn't change it. Day traders lose money on a daily basis. I mean, the reason all these platforms give people the ability to trade is because traders in the main are not very good at it. That's why they give you leverage, because then you're going to lose even more money thinking you know what you're doing. And I don't mean that you don't know what you're doing and I do. I don't day trade with leverage either. I don't trade anything with leverage. There's been a couple of times in the past where I've gone 2x on the S&P 500, which is the most difficult market on planet Earth to manipulate because it's the biggest one. But other than that, I don't touch leveraging. And, the simple fact of the matter is they give this facility because they know it's going to win them money. I put a tweet out probably 2 weeks ago, and I actually shared the revenue that Binance makes from fees and then from the derivative side of things, which is essentially leveraging. And it's not that they only make that profit on the actual killing of the trades. It's the fees that are associated with that and things like that as well. They make more money from the leveraging side. I think that the difference in their income was about 70% of their revenue came from the derivative side, the leverage side of the sector, than it did just from their normal standard everyday fees. They do this because it makes them money. And if it makes them money, eventually it's us, the consumers, that pay for it. That's just a simple way it goes. There's no other two ways about it. It's probably too late for this video now. I mean, it doesn't matter much. I only get about 50 viewers normally anyway. But it's too late for this video now. But in the same respect, it's not, because people need to learn why it happened. And it didn't happen for unpredictable reasons. At the end of the day, the exchanges are not your friend. They've never been your friend. You are a customer, and you pay them money for the service of buying and selling crypto, and then they try to entice you in with an even better deal. Imagine if you walked into a bookmaker's, there's a big sports game, boxing match, whatever it might be. Let's say there's a big fight on. Yeah, so it's going for the world title, heavyweight world title. You walk in and you say to the guy there in the bookmakers, I want to put $1,000 on this guy to win. Ordinarily, you just take your bet. Yeah. If he turned around and said, well, I tell you what I'll do, I'll lend you $10,000 and you can bet that against me. And if you win, you win the same odds on $10,000, or if you lose, you owe me $10,000. Why would he offer that kind of incentive? It's because he knows he's going to win, right? Ultimately, he knows he's going to win. It's probably not a good analogy, because over a case of one boxing match, maybe not, but he would only offer that if he knew he was going to win. And the same thing with leverage trading. I've never met a leverage trader who placed a trade and won and didn't give it all back again one day. I've never met one. Two or three world-class traders, the guys that trade the desks for the bank, they will use leverage sometimes, but they have incredibly robust risk parameters. They'll only leverage 10% of their overall book, give or take, and that 10% will be split between 10, 15 different trades, quite often going in opposite correlation to each other, so that if they lose one, they gain the other. There's not many times when leveraging works for anyone but the market maker, and that's why I was out there saying it. I mean, a few other things went wrong. I don't think they realised how big this was going to be. There was an awful lot of cross leverage out there between the exchanges. Most exchanges will know what each other have in positions because they document that evidence. I mean, you can buy heat maps yourself, right? You can subscribe to heat map subscribers and things like that. But I don't think they realised how much cross leveraging was going on. So an awful lot of people didn't have $100,000 to 10x it to $1 million portfolio to play with. They use their existing crypto holders to provide that collateral. This is where you see the guys that have gone from $30 million to zero in the space of 5 minutes. They were cross-leveraging across their entire portfolios. And even if you've only got those leverage trades at 2x, there's a multiplier effect, right? One goes, the other goes, they all go. This was manipulation. It was done on purpose. And I was having a conversation with my brother earlier. He's like, well, surely no one should trade crypto on platforms then. I said, well, not trade. You should hold crypto on platforms still, on exchanges. There has to be an element of distrust in everything we do. Everything we do. I'm too much the other way because I've been in the industry. I've been there and done it for the last 20 years. I know exactly how much trust and how much distrust there should be. And I'm the most cautious person out there on all these things. It's one of those things. There are elements that would put you off every single industry in the world if you knew the inside out. If you knew absolutely everything, you'd probably never eat in your favourite restaurant if you saw what the chefs did behind the kitchen door. You'd probably never get on a bus if you knew what the bus driver did the morning. There's every single industry on planet Earth. There's reasons to be put off. Hold your spot, buy spot. Today's a great day to buy spot. You've got a 30% discount on most coins. Am I concerned that this brings about the end of the bull market? No. Am I more concerned today than I was 48 hours ago? Absolutely. If you'd asked me 48 hours ago, where's this market going to go in the short term, I'd have said down, but I wouldn't have said down by so much. I've been preaching all over Twitter for the last probably 2 months that this market was never going to be allowed to go up until those long trades stopped. They were always going to push the market down to clear out the longs. I thought they'd have done it in a more reasonable manner, a less obvious manner. I'd have thought they'd have slowly squoze things down, and exhausted the long trades in a sort of slow, short strangle rather than what they actually did. But I'd have said markets would be lower, but I certainly wouldn't have had any doubt, really. I'd have been 99.99% certain we were going to have this blow-off top run at some point in the near future. I'm probably now more like 75 to 85% certain. Which, again, missed the play it safe as I am, I don't like those odds nearly as much as 99. That's the way the world goes. Have I sold anything? No. Actually, not quite true. I did sell for the first time in my life. I sold some XRP, but it's not what you think. So I went on to one of my exchanges when the prices were rock bottom. Well, they weren't rock bottom by the time I woke up, but when they were as low as I'd seen them in months. And I wanted to buy, and I couldn't buy a coin anymore, but I had XRP on that account. I couldn't get my money on. They weren't accepting money on, but they wouldn't let me swap. So I swapped some XRP for some cookie dough. Not a lot, 1,000 XRP. And then I went on to my other exchange, which was accepting cash, and I bought the XRP back about 2 minutes later. So I did technically buy some XRP, which annoys me a little bit because it's bodged my numbers up. I was always very, very proud that I've never bought XRP above 60 cents. And I did buy XRP. I think it was about $2, give or take $2.30. Did it get to when it leveled off? I didn't catch the major dip. It's not gone up much since I did it. And the cookie's gone up a little bit. But no, it was more a case of I wanted an additional purchase of some alts that were very, very cheap, and I couldn't get the cash onto that exchange, so I did it the other way around. So I got about £2,000 worth of alts, and I sent the 2,000 to my other exchange to top up my XRP again. So I did technically sell some XRP, but not in the way you think. I'm going to call it a swap. So yeah, in that respect, no, I've not sold any of my holdings, and no, I don't intend to. I think the next few days will give us a better example or a better idea of where we're going. There is a chance. I think they've overcooked this. I think they have inadvertently put off some of the original gangsters. Some of the OGs of the sector have lost their entire bags. 10 years worth of hard work. I don't think them guys are coming rushing back anytime soon. And we haven't had the same retail influx that we have in other bull markets. So have they shot themselves in the foot? Have they, bit the hand that feeds them, if you like? I don't know. I still suspect that we go up from here. Let's be honest now. If the reason we're calling this flash crash is because the exchanges deliberately went to wipe out the leverage, the only reason they would do that is because they didn't want markets to go up and have to pay out billions, possibly trillions of dollars. I don't know what I'm making numbers up. I don't know what the outlay would have been, but they would have had to pay that out. So if that's the reason they brought about this flash crash, to clear the slate and get rid of all those long leverage trades, that would imply that their thought process is that the market still has another run, right? Otherwise, why do it? Why lose all those customers? Why cost yourself all the potential fallback on that? I do suspect there'll be lots and lots of complaints. I do suspect there'll be some kind of investigation. I don't think anything will come of it. I think everyone signs small print when we've opened exchanges to say if you leverage, more for you, basically. It's not illegal to drive markets down as an exchange. It's not. It's a grey area. It's not very nice, but it's not necessarily illegal unless they can prove fraudulent manipulation. But the only reason they would do that is they would want to clear those longs before the market goes up. Remember, we've got ETFs very, very soon that should be approved. The government shutdown doesn't help that, but they should be approved very, very soon for XRP, Solana, 2 or 3 other coins. We've got lots of buoyant reasons for this market to be going up. So they just wanted to clear those longs out so the market can go up without them having to fork out for it. Which is disgusting, but the simple fact of the matter is that's the world we live in. If you don't know how these things work, you're in the wrong game. There's lots of things I can't do. I don't know how to fly an airplane, so I don't get in one and try and fly it. I'm not very good at driving, so I don't try and become a Formula One driver. There's lots of things that you wouldn't dream of doing unless you were an absolute expert at. I wouldn't jump out of a plane with a parachute on. I don't know what to do. So there's things that you wouldn't dream of doing, and leverage trading should be considered equally as dangerous. I don't know many professional traders that make money with leverage. I know plenty that use it and don't make money because of it. I know plenty that might get 9 trades out of 10 right, and then one wipes them down, but they have risk parameters in there that protects them from the full downside. That is something that should be discussed, by the way. I think there was some major failings on behalf of the exchanges this time when it came to stop losses. Again, if you read your small print, it will clearly tell you somewhere in those contracts that sometimes a stop loss can't be filled, and if it can't be filled, you took on the bet, it's on you. Leverage is trading, is gambling at the end of the day. The stop losses should have come in, but it went so fast, I don't think they could. I actually had an XRP, a long trade that I'd placed, a buy order I'd placed going back to, I don't know when, it would have been April, I bet. And it was £2,000 buy order on XRP. It was $2,000 because the buy order was set at $1.80. And it should have filled, but it didn't fill. And their explanation for that is it just went through and back too quick. We couldn't fill. The exchanges are only capable of handling so much traffic. I'm not that bothered. I actually, that's the same money that I used to buy the cookie DAO and flip around with the XRP. So, but there should be some kind of comeback for that. If it's provable that you had a stop loss in place that wasn't filled, I would like to think that some of the exchanges would do the honourable thing, but I doubt it, only if they're legally required to, which I doubt they are. So yeah, it's an awful day. It's an awful day to be talking to people, but the message here is we get to live and fight another day. The market hasn't absolutely capitulated. I thought we would come down and kiss these levels anyway before we got the rally. So for me personally, it's kind of brought the timeline forward, which is a good thing. If you look back at 21 and 17, there was a flash crash like this almost immediately before the big blow-off top rally. Does that guarantee things are going to go up in the next few days? Nope, absolutely not, unfortunately. I'd love to tell you it does, but it doesn't. But this isn't that unusual. It's the first time for most people, and for some people it's the first time after 2 or 3 cycles they've been cut out. And I am absolutely gutted for everyone, but this is the market. We pick ourselves up, we dust ourselves down, we go again. I'm a spot holder. I look at the chart today, and this is what's happened to me. I've seen my price of XRP come down, but if we zoom out, so on the week, there we go. But if we zoom out, realistically speaking, we're at the same price now that we were back in July. That's what it does to me. I wasn't going to sell today, whether we'd gone up 50% or down 50%. So as a spot holder, we get to live another day. If it affects the market so bad that we genuinely believe there's going to be a crash and the end of the bull market, then that will change my plans. But realistically speaking, I don't think that's where we're going to go. I think we're going to find ourselves looking at a nice, attractive looking market again, at least by the end of October. But let's see. Guys, I'm going to leave that with you. I've got a dog barking in the background. I've got various things going on, and we're already 24 minutes into the video, so I don't want to yap on all day. Thank you very much for giving me the time, for staying here with me. If you like what I said today, please do hit that like button. Please do subscribe to the channel, and I'll speak to you all again soon. Have a great day.